The Alligator Indicator was invented by Bill Williams, and it uses 3 lines, which are really just moving averages with a bit of a spin to them. Market's trend and market's range. And the 3 lines of the Alligator Indicator, known as the jaws, the teeth, and the lips, is designed to alert traders to the presence of either of those market states. And from those states, a trader can determine if they're going to use a range trading strategy, a trend trading strategy, or just wait for a breakout strategy to be used. So 3 moving averages, smoothed, are used, but they are displaced moving averages. So this just means that the reading is adjusted X bars into the future, and that just better forecasts the future trend direction. And the alligator settings are, the green moving average is the lips of the alligator, and it's set to 5 and displaced into the future by 3 periods. And the periods is whatever time frame you're using. The red moving average is the alligator teeth, and it's set to 8 periods and is pushed 5 periods into the future. The blue represents the jaws of the alligator and is set to 13 periods and displaced 8 periods into the future. Now, there's custom indicators for various charts and comes with MetaTrader, and it makes it easy to apply this to your charts. So how does it work? Since markets evolve from trend to range, we can think of the market like an alligator. When the market's ranging, the alligator is sleeping. When the market shows signs of a trend, the alligator is waking up. And you monitor the condition of the 3 lines to determine what state the alligator is in. When the 3 lines are intertwined, we do not have a trend. And this is generally a time of low volatility, a range, and most traders may want to find another instrument to trade. Now the lips of the alligator, the green teeth, is the fastest moving average, and it's going to be the first one a trader will want to monitor. You want to see the green line cross the moving averages that are slower. And this is a sign that the alligator is waking up. We also want to see the lips and the jaw start to turn in the direction of the green line. And many traders will enter the market following a candle close above or below all 3 lines at this point. So considering an uptrend, the green line has crossed the red and sometimes the blue, depends on the market state. The red line, the teeth, starts to head upwards, crossing the blue line, and now we can determine that an uptrend is in place. Now here's a great analogy which will help you decide when a trading opportunity could be presenting itself. When the 3 lines of the alligator are intertwined, the alligator is sleeping. So when the alligator is sleeping, nothing interesting is going to happen. The longer the alligator sleeps, the hungrier it may be when it wakes up. So you think of a market that's ranging. We know it's going to break out, and the longer the range continues, the more violent the breakout can be. So as the green line starts to cross, that's the lips opening up, we could be looking at an alligator getting ready to feed. And this is the time that you want to be on alert for a trading opportunity. As the green line continues in one direction, the red line, which is the teeth of the alligator, begins to separate and move in the same direction. So the teeth are opening. Once the first 2 lines start to pull away from the blue line will start to trend in the same direction. So the alligator has now opened its jaws and is looking to feast. And the trader is also looking to feast on the price action that's happening. If the lips cross the teeth and the jaw, so if the green line crosses the red and the blue line to the upside, we consider a bullish alligator and we look for long trades. When the lips cross the teeth and the jaws to the downside, we consider looking for short trades as we now have a bearish alligator. So at this point, you've learned how to set up and use the alligator to determine the state of the market and the trend direction. And there are several trading strategies that you can use. And keep in mind that all indicator-based strategies do lag the market. So the indicator alerts us to 3 stages of market development. And with the understanding of those, you can design a simple approach to trading the market. So the alligator is sleeping. When the 3 lines intertwined, the market is at rest. Alligator's waking up when the green line crosses the red and the blue. We have a possible trend forming. The alligator is eating when a candle closes above or below all 3 lines, and you should be in the market. You got to keep in mind that since we are using displaced moving averages, each of the 3 lines will be plotted ahead of price by the factor of the displacement, the 3, 5, and the 8 periods. And this can affect the trading strategy that you're going to use. So when the alligator is sleeping, the market it's range bound. And a range trading strategy may be used, which can give you a jump into the market early. And you can see here that the 3 lines are mixed together. When this occurs, you section off the previous high and low, and using your entry tactics, you trade inside the range. Also note on the far right, price is broken from the range and pulled back. That's a classic breakout pullback trade. At the same time, the spacing of the alligator line is supporting your short trade. So once lines have shown a direction, you can resort to using a price action pattern that's a staple of all traders, the pullback. You want to see all the lines pointed in the same direction in order, and that shows a trend is underway. Unlike the first strategy, trading pullbacks in a maturing trend does pose some risks, as a trend may just run before giving you a trading opportunity. And you can determine the length of the pullback needed by choosing where price is to pull back to. Here you can see obvious pullbacks that have pulled to the green and the red line, while the blue line kept the upward slope. Now the horizontal line is not a perfect pullback, but the tail on the lower green candlestick is a price action reversal near the first pullback low. On the far right, you can see this pullback failed. However, there was no break above the yellow line before price began to close under the 3 lines. And the simplest trading strategy for the alligator is to trade the close of a candlestick after it closes the line. And I would suggest that traders look at support and resistance to ensure the buy and sell signal is not right into a previous cluster of price. Note the green line has crossed over to the red to the downside. Remember, these lines are displaced into the future and would have plotted in front of the candlestick that we're shorting. The green line has crossed the red to the downside. You short at the low of the candlestick that closed below all 3 lines, and you close your position when a candlestick closes above all 3 lines. As for a stop loss when using the alligator, consider using a multiple of the average true range or use previous swing highs and lows. So in closing, really the most important part of the alligator is when the 3 lines are mixed together. So this is when the alligator is considered to be sleeping and no trading signals are present. You should keep these instruments on your radar, especially if price action is hinting at an increase in momentum. And the best time to get on board a trend move is just before it starts. And while you may not be able to pick the exact price the trend begins, getting in as close to the beginning as possible should be your goal. When the alligator is feeding, watch for pullbacks against the main trend direction and just trade those moves with a pullback strategy. And as with any trading strategy, it's vital that you test it. It's vital that you lay out a trading plan and ensure risk management is priority 1.